Well, good afternoon, everybody, ladies and gentlemen, and welcome to the Wednesday Lunchtime Drive Through on Wednesday, April the 6th, 2022. I'm your host, Damon King, certified financial planner and wealth management advisor with ChappelWood Financial Services. I am the lead instructor for ChappelWood University, which is the educational branch of ChappelWood Financial Services, and that's why we do this. We like to educate. And, even when you join the ChappelWood family, we never stop teaching you. Not that you're not a smart person. Obviously, to build wealth, you got to have some intelligence to do that. However, you're always looking to expand your knowledge, and that's what we're here to do, is expand your knowledge. And one of the other ways that you can expand your knowledge and really multiply yourself is to expand the knowledge of your family. The whole inspiration for me talking about this today, preparing your family for an inheritance, came from a recent conference that I attended. Victoria and I actually attended. It's a national by invitation only conference for top advisors with our investment partners. And one of the sessions that I went to talked a lot about preparing the next generations to receive this wealth. I mean, probably for the last 20 years, I've been hearing about the great wealth transfer. I'm sure you've heard about it too. All the baby boomers who are slowly aging, eventually are going to pass on their lifetime of accumulated wealth to their kids and possibly the grandkids and so on and so forth. And so this great wealth transfer has been talked about for at least 20 years, probably longer than that. But I mean, I've heard about it for at least the last 20 years. I'm 45 now. So 25, when I really became a professional, that's when I started hearing about this. And it's getting more and more important to talk about it. Back then, it was just like, it's going to happen. Well, it's now is now. Okay. It's time to really think about this. And many of you are in a situation where you've built up all this wealth, you've got your plan in place, and you may be planning to spend a lot of your money. In fact, if you're our clients, we know you're planning to spend a lot of your money, but we also know many of you have the desire to pass on some of that money, or you're not going to spend all of your money. And so you want to make sure that you can pass it on to your family. However, we hear from many of you, whether they're clients or you're not yet members of the ChappelWood family, my kids are not ready to inherit my money, or I'm concerned what's going to happen if I drop a couple of $100,000 or $1 million on my family. So let's talk about that today. All right. So family wealth often disappears. In fact, 90% of families, and I've shared this before, 90% of families will see their wealth disappear inside of 3 generations. 70% of families see their wealth disappear by the 2nd generation. So the 1st generation is you. You built the wealth. The 2nd generation is your kids. And the 3rd generation is your grandkids. 90% of families lose their wealth by the grandkids, the 3rd generation. And it's not very difficult to see why. We still have too many parents, too many families not discussing money with their kids. Money is still a taboo subject in many American families. They don't discuss money. They don't talk about how it's earned. More importantly, they're not discussing how hard it was to earn it. What's important to me and what is important to our family. So parents are not discussing money with their kids, and the kids don't know what their parents want. Okay, so there's no communication or very little communication. And as a result, the lifetime of accumulated wealth, the blood, sweat, and tears that you put into it, your kids may not really understand, and certainly your grandkids, they don't appreciate how hard it was for you to earn it. And if you don't appreciate how hard something was to earn, well, then you're not going to have a lot of appreciation for trying to keep it, right? If it doesn't belong to you and you've really played no role in building it, you're not going to be nearly as involved in the process of keeping it. Okay, so you got a lot of kids and grandkids who are unprepared and really don't appreciate. And I don't mean they don't appreciate you. Okay, what I mean here is we're not talking about rotten kids and grandkids. We're talking about you've got good kids, you've got great grandkids, you've done a great job as a parent. What I'm talking about is not appreciating the toil to build something themselves, and it's just given to them. It's very different. So I just wanted to make sure that I clarify, what do I mean by appreciate? Now, why does wealth disappear? Well, 60% of family wealth transfers fail due to not transferring family values. Okay, again, most wealth transfers fail. And by fail, I mean the money you left to your family that you were hoping would last at least through the next generation disappears within a few years. And that is because a lot of times you're not passing on what is important to you, your family values. You'll notice it has nothing to do with picking the right investment strategy. Okay. Often it's because there's a lack of understanding of what's important to the generation that created the wealth. And so the generations that inherit the wealth don't place nearly as much value on it. That doesn't mean they're mean or rotten or evil. It just means if you didn't have a hand in creating something, you're not going to take as much care of it, right? Right. Okay. Now, oh, you know what? I think, so if you see my friend Doug Eckert there or Jennifer on the screen there, it's because I still have him listed as a panelist for this from last week. So, hey, Doug, hey, Jennifer, you're on screen right there. So just keep your camera off if you don't want to be seen. Okay. Sorry about that. That was my mistake when I said this. So 25% of family wealth transfers fail because the children are not prepared to inherit the wealth. Either they're too young, they don't have a lot of experience managing money, a combination of the two, they're spendthrifts, whatever. But 100% of your children will do what they want with the money they inherit from you unless you ask them to do something specific with it. Okay? I mean, I like to believe if my mom and dad asked me to do something specific with a certain amount of money or property that they left to me, that I'm going to honor their wishes. But if they don't ask me, if they don't let me know what those wishes are, I'm probably just going to do whatever I want to with the money. I will assume that, well, they blessed me with this money, and I'll make a gift to charity in their name. I'll do something that I know would be special to them. But beyond that, I'm going to do what I need to with this money. If you don't prepare your family to inherit wealth, there's an extremely high probability that it will not last beyond your grandkids. Let's see here. Eddie has a comment. It's always easier to spend someone else's money. Heck yeah, it is. Who wouldn't want to be gifted with a bunch of money that they didn't have to work to earn, and yet they're just going to drop it in your lap? There's very little appreciation there for that. All right. So you've got to prepare your kids to inherit wealth, but not just with their values. There's some education that goes into that. So I'm going to give you a few things that you should be considering as it relates to preparing your family to inherit the wealth that you have either already built or that you are building right now. Okay. So let's dive into it. It starts with communication. That's the most important thing. Communication is the most important thing in any relationship, whether it's the relationship between spouses, between parents and children, grandparents and grandchildren, co-workers, cousins. I don't care. The basis of any really good, strong relationship is communication. So I'm going to ask you, have you shared your final wishes with your family? Don't give me this, but I don't want to talk about dying because it's sad. You're not going to avert death by not talking about it. And really what you're going to do is do a disservice to your family and to yourself. Don't you want your final wishes known? Okay. And your final wishes, that could be a multitude of things. It could be your final wishes with money, but it could also mean, I want this specific music played at my funeral memorial service. I want these flowers at my graveside. I want to be cremated. I want a bagpipe procession to come through the church or wherever my service is going to be. I don't know. I want you to make sure you support these charities for at least a few years, whatever that might be for you. You need to let them know what's in your estate plan. Okay? And certainly, if you have named one or more of your children as your executors, probably a pretty good idea to give them a copy of your estate plan, your will, or your trust, and let them know what's going on. Tell them what's important to you. This is also a really good time to write a love letter to your kids, okay? Whether you actually write it down or you record your voice or you record a video. Those of you who have lost your parents already, wouldn't you give anything to hear your mom's voice again if you don't have a recording of it? Wouldn't you give anything to have a handwritten letter from your dad telling you how much he loves you and you know he's going to miss you? We all want that connection. And eventually, as the pain gives way to memories, you're still going to want to look back and you wish you would give almost anything to have just one more day to hear your mom's voice on the other line. So it stands to reason that your kids and grandkids are going to feel the same way about you. So make a recording so they'll always have a copy of your voice. You never know. There could be dark days when I just want to hear mom's voice or dad's voice again, and they can play that back. And it's someone that loves them from even beyond the grave, from heaven, telling them, I love you. So tell them what's important to you, and then also tell them how important they are to you. Include them in conversations with your financial advisor. One way to dispel the mystery and the miscommunication about what is important to you and what you've done, at least from a financial standpoint, include your kids in conversations with your advisor when it's appropriate. We're not talking about teenagers here, okay? We're talking about grown adults, grown men and women who probably now are married and have their own families. And now it's time, as you get into your 70s and 80s, maybe even before that, in fact, I would encourage you before that, as soon as you believe they're ready, include them in those conversations with your advisor. Let them know where the important documents are, what websites they're going to need to go to, where are the passwords that you use for all the accounts that they're going to have to get into to get documents. And I'm not talking about just financial accounts. I'm talking about your social media accounts, okay? Your Facebook, your LinkedIn, your Twitter, your Instagram. Where are all of those pieces of information? In a safe deposit box, in a safe, on a computer, somewhere, on a flash drive. Heirs who know what to expect are better prepared to manage the wealth that you are going to bless them with, all right? Then there are some tax considerations, okay? So now we're going to get into some of the nuts and bolts of the actual money here. So some things that you need to know as it relates to assets you might own right now. Life insurance death benefits are tax-free for the most part. There are some very rare exceptions, but for the most part, if you're going to leave life insurance to your family, that's going to be received tax-free. So that's important for your heirs to know that. That's a common question we get all the time. Am I going to have to pay tax on this life insurance I got from mom or dad? The answer is probably not. But what about if I inherit a traditional IRA or an annuity from my parents and your kids are going to get that? Is that taxable? Yes, it is. Okay, it's taxable if you leave it to a spouse. Well, it's also taxable if you leave it to your kids. So an inherited traditional IRA, if it's pre-tax, it's going to be taxable to whoever inherits it. Annuities, even if it's funded with after-tax money, the growth on the annuity is going to be taxable to kids. You want to take advantage of the step up and basis rule. So one question we get a lot is, you know what? I've got this house and I just want to gift it to my kids right now. Or I want to gift this land to my kids right now, or these mineral royalties, or whatever it might be. And there are good reasons for doing that while you're still alive. But from a purely tax planning standpoint, it could be more advantageous to actually pass that on after you die. If you were to gift that asset to your kids right now, number one, it's going to count against your lifetime gift and estate tax amount. All right. And you're going to have to file a gift tax return. You won't necessarily have to pay gift taxes on it, but you're going to have to file a gift tax return. But now, once that asset is in your kid's name, now as it grows in value, well, then if they were to ever sell it later on in the future, they're going to be hit with the capital gains taxes. However, if you pass on assets after you die, the family farm, the mineral royalties, the stock portfolio, the house, whatever, they're going to get what's called a step up in basis. So whatever you paid for it, if you were to turn around and sell it, because now it's valued here, you're going to be taxed on the capital gain, right? But if you pass on an asset in death, your kids, their basis now is not what you paid for it. It's going to be whatever the value is on the day of your death. And if they get that asset and then they turn around and immediately sell it, the capital gains that they're going to be taxed on are minimal to zero. So you want to take advantage of the step up in basis rules. And this is especially important on assets that have greatly appreciated in value. If you bought Apple stock back when Steve Jobs was still working out of his garage, okay, there's a lot of appreciation that's happened there, okay? If you sell it, you're going to have a major capital gain. But if you leave it to your kids, now it's going to get a step up in basis. And now if they would liquidate it, of course, they probably want to hold on to it. But the point is, if they liquidated it now, the capital gains tax is going to be virtually nil. Then you have what's called income in respect of a decedent. This is income from assets that you would have received while you were still living, but now that you have died, and now this income has to go to somebody. So it's going to go to your heirs, and now it's going to be taxable to them. We see this with dividend income. So if you own stocks that pay dividends and you pass away, and now your kids get that dividend or your heirs get that dividend, that's going to be taxable to them. They need to know that, okay? Because there could be some tax surprises that come along with some of these things. If you have rental properties that you receive income from, you have mineral royalties that you receive income from, and that income is paid to you after you're dead, it's got to go to somebody, and it's going to go to your heirs, and they're going to be taxed on that. Okay. So those are some of the tax considerations that they need to be aware of and that you need to be aware of. We've seen it happen, tens of thousands, and in some cases, hundreds of thousands of dollars, depending upon, we saw a very large estate. Money can be lost to taxes due to improper or inefficient transfer of assets. So that's why, for those of you who are our clients on the call, you've got your financial organizer, right? And the very front inside cover is the stop sign, or it's one of the first pages, and you signed it. And it's a note to your family that says, if anything happens to us or to me, don't just go liquidating all the assets. Call ChappelWood first, because there could be some tax considerations that you don't know anything about, but they can help you with, okay? They can help you with an orderly distribution of assets. Again, as I always say, if you've got any questions or comments throughout today's presentation, please feel free to drop it into the chat box or the Q&A. Something else. Does your family even want your stuff? Okay. Maybe you have a family farm, or you've got land way out in Western Oklahoma or in East Texas or in Palm Springs, or you've got a timeshare or wherever, and you just assume that your family's going to want it. Don't assume anything. You got to ask them. All right. And the way they need to know about it, because what if they don't want it? What if they don't want your family business? Just because you enjoyed it doesn't mean your kids are going to want to go in the family business. Are there collectibles? My mother-in-law has this incredibly valuable and rare collection of salt and pepper shakers that GIs and soldiers from World War II and different wars bought in Europe and then brought them back as gifts to her mom. and now she's inherited them, and now she has passed them on to my wife. Well, her brother, my brother-in-law, doesn't care anything about them. So he wants to take his half and sell it. Well, my mother-in-law doesn't want to break up the set. So what does she have to do? She gave my wife all the salt and pepper shakers because she wanted to keep them. And then in exchange, to balance things out, they're going to gift their son, my brother-in-law, my wife's sister, brother, something else, cash or some other piece of property that he doesn't want. All right, jewelry. All right. Do they want your jewelry? Pets? Do they want your collection of emus or whatever that you have in the backyard? Just because you love it doesn't mean your kids are going to love it. And if it's something you want preserved, then you need to make sure, okay, who really wants this? And if somebody wants something specific and it's important to you that it stays in the family, then make sure a family member who wants to keep it is going to get it, and then give the other family members something else. Because I promise you, anything that has monetary value that you give to your family and you've not given them any instructions, you know what they're going to do with it? They're going to sell it. And if you didn't want that, but you didn't make your wishes known, unless you found a way for your ghost to come back and haunt them, they're not going to know. Okay. And then you want to plan for special purposes. So do you want to carve off a certain amount of your money to help pay for college for your kids or your grandkids? You know, if you're still young and you've got kids that are in college right now, and something would have happened to you and you're paying for their college, how would they pay for college? Have you carved off a certain amount of money for that purpose? Maybe you want to help your grandkids, help with a little bit of college money for them. Maybe you want to help your kids buy a house, get married, start a business. You have grandkids. I've got a client that his wife passed away and he received $150,000 life insurance death benefit. He doesn't need that money. And so what he decided to do was set aside a special trust fund that we helped him set up. And we added an amendment to his trust that is specifically for the grandchildren and that specific amount of money. And he had certain restrictions on it. He didn't want them to have access to their proportional share until they turned age 25. And if they needed the money beforehand, then he only wanted that money to be used for their health or their education. That's it. All right. But he had to enumerate that. And trusts can be extremely useful for helping your family in special ways by setting aside a chunk of money for a special purpose, so it's not spent on other things like, you know, the trip to Vegas or a new car or whatever. So if you have anything like that you want done, you need to make sure that it is clearly spelled out in your estate document. And a trust is a really good way to do that. A trust is also a really good way to maintain control of certain assets, even from beyond the grave. We hear this a lot too. If something were to happen to me right now, my kids are young, either they're in college or they're even still in their early 20s, and I don't really feel like they've got a good handle on managing their own money, much less if they get $250,000 from me. I'm afraid they're just going to go out and blow it. Sometimes parents tell us my kid's a spendthrift. Sometimes their kids have a drug problem. Sometimes they married somebody that I don't think that marriage is going to last, and I don't want the future potential ex-spouse to get his or her grubby little hands on any of this money, okay? Or if they remarry, I don't want the new spouse's kids getting my money. I want it for my grandkids, my biological grandkids, and my biological children. Trusts can be extremely efficient at retaining control of assets from beyond the grave. So instead of giving them the asset itself, the cash, the property, whatever, instead what they get is income from the property, income from the investments, income from the house for a specific period of time. And you can put age restrictions in there. You can put, okay, this money can be released at a certain date, whatever. But you can't do that unless you have enumerated that in your estate plan. And without an estate plan, it's very difficult to prepare your family to inherit your wealth. It's very difficult to do that because I promise you, they're just going to spend it. Okay. Unless you ask them not to. And I don't mean they're going to spend it on frivolous things. They're going to spend it on stuff they want. All right. And it may be to buy a house. It may be to pay for a college education. The point I'm making here is if there's something specific you want from your kids, you need to let them know. If you're concerned that they're not going to be able to handle this wealth, you need to take steps to guard them, protect them, and educate them. Now, that last point that I just made, education. All right. So at the top of the show here, before we actually got started, I mentioned to those of you that were on at the time that we're planning something special. We've got a special announcement. So as I mentioned to you, I went to a conference and I learned all about this wealth transfer. Or actually, I just heard about it again that I've been hearing about for 20 plus years. And it really got me to thinking. I've been having a lot more conversations with clients on, how am I going to make sure that my kids are prepared to receive this wealth? And we've been having a lot more open, honest conversations about it. And I just started thinking more and more about it. And something that's really been on my heart lately is we spend a lot of time educating you. And you come to our classes and our webinars and you listen to our radio show. But one area that I think we've fallen short is educating your family, educating the next generation. So I'm inspired and I want to put together a special educational event. I don't really have a name for it right now, but a special educational event that I'm targeting June of 2022 for heirs, an heirs event, educational event to help them understand and prepare to receive the wealth that you have created. So I have some questions for you, and I'm going to launch these questions. So question number one, you should see it pop up. If we were to host a special educational event for heirs, which type of event would your family prefer? An in-person event or an online webinar that you could all gather and from the comfort of your own home do that? So take a few seconds here and let me know what your preference would be. And I know many of you are out of town, and so an in-person might be tough to get to anyway. Okay. Okay. So far, I'm a little surprised by this. I'll give you just a few more seconds here. I'm going to give you 10 more seconds if you haven't answered yet. Actually, I think that's everybody. All right. So we're going to end the poll here. All right. So 82% of you would prefer an online webinar. And so I thought more people would want in person, but you know what? I know online is great. I mean, we're online here, right? So plus it means you could do it anywhere. And okay, that's good to know. So thank you very much for that. Now I've got my next question. So let me launch that one. This question is, what format would be most attractive to you and your family? An informal, short agenda where we don't really come in with a preset specific list of things to talk about, maybe a handful, but really keep it more open-ended so that your family can ask any question they want. Or would you prefer more of a programmed event where we bring in speakers on estate planning to talk about taxes, and it's much more structured, still with some Q&A, and obviously you can ask questions anytime, but what would your preference be for your family? Think about your family and what you know would be most valuable to them. Something more informal where they can ask any question open-ended they want, or something that's a little more programmed, and we're bringing that information to the table. I'll give you a few more seconds here. Okay. All right. Okay. Looks like most everybody has, okay, we still have some responses coming in. If you're still thinking about it, let's see here. Okay, Doug says he would prefer an in-person informal event. He can't vote because I have him listed as a panelist. So again, I'm sorry about that, Doug. All right, so we're gonna go ahead and end the poll here. And this didn't surprise me at all. Most of you would prefer a programmed event with experts that we might bring in, a trust attorney, CPA, something like that. Obviously, there would still be some Q&A in this, okay? We're not just gonna say, you can't ask any questions. But many of you would like to have people that maybe you can ask very targeted questions to, okay? So it's not just kind of a willy-nilly ask anything. All right, so that's helpful. I have one final question for you, okay? So bear with me. I'm gonna launch the last question here. Again, you're helping me to build this. So the next question is very simple. Would you like for your family to attend such an event? And if you don't know the answer to it right now, or you just really don't have any interest, that's fine. But if you would like to be invited to such an event as this, I'd like to know it so that, number one, we know that there's an interest, and number two, we can get you on the invitation list, okay? Again, as you're answering, I'm thinking about doing this in June. April is too soon. May is going to be full with strategy reviews with our clients and different things like that. So I'm looking at June. And more than likely, this is going to be, well, let me ask you this, okay? And I don't have a question for this, but if you could put it down in the chat, I'd like to know, would you prefer this to be like for a couple of hours on a Thursday evening, like when I teach most of my classes? Or would it be better for your family, since you probably all have adult children who are working? Maybe it's difficult for them to attend the class in the evening. It might be difficult for you to attend. Would you prefer something from like 10 till noon on a Saturday morning? Okay, so what would be your preference? Would you prefer an evening during the week, like on a Thursday evening? Or would you attend an online event from 10 till noon on a Saturday morning? So could you please put that in the chat and let me know what you would prefer. While you're thinking about that, I'll share the poll here. So yeah, a lot of you want to be added to the list, so I'll make sure that you get added to this list. Once I have a date set, I will get those out. So far, I don't have anybody letting me know if you would prefer a weekday night, like it would be most likely a Thursday evening in June, or a Saturday morning for a couple of hours. I'm only thinking a couple of hours. Attention spans are not that long. So I tell you what, if you've got my email address, in fact, I'm going to share my email address in the chat. So Damon at ChappelWood.com. All right. Shoot me an email and let me know what your preference would be if we hosted this. It's not set in stone yet, but I'm really leaning this direction because I believe this is information that needs to be delivered. And your families need to begin thinking about this, and hopefully it opens up the door for conversations between you and your family. You shouldn't be afraid to talk about money, because I promise you, if you're not talking to your family about money, then somebody else is, and it may not be what you want. All right, so some say evening better than weekend. That was Dan. Wendy says if it's after 6 p.m., then Thursday works. It probably would be after 6 p.m., Wendy. More than likely, I'd be looking at from 6:30 to 8:30, something like that. Kind of when I teach my Rocky retirement class. Bill says I've got 5 kids scattered in all time zones. So, you know, maybe we could figure this out somehow. And of course, it would be recorded. And that's the other benefit of having it online. I can record it. So, all right. Well, I want to thank you guys very much for your participation today. Thank you for all that information. It's very helpful to me as I build out this special event for your heirs. And of course, if you have any questions, if you ever have any thoughts, you just want to bounce it off of somebody. You don't have to be a member of the ChappelWood family We would certainly love it if you were, but even if you're not, and you've got a question, just email me. I'll answer your question. Okay. I mean, I'm not going to bill you for that. All right. So I'm here to educate, and I love teaching, and I love bringing this kind of education to you. So with that, thank you so much for joining us on the Wednesday Lunchtime Drive Through. Hope that you have a wonderful rest of your day. Enjoy the rest of your week, and we'll see you next time. Bye-bye.